All right, bull runners, welcome back to the channel. So, should you be getting out of crypto now? A lot of people are wondering, should you be selling? Should you be holding with the ETFs coming up? When is the best time to sell? As always, this is not financial advice, but I do want to share with you guys what's going on in the markets when you see projects like Solana flipping XRP. A lot of people are wondering, should they get out of XRP? Should they sell their XRP for Solana as it performs better? And why is this happening? We're going to talk about the price chart for XRP compared to Solana. We're going to be discussing what's going on with the Ripple lawsuit, some important dates to pay attention to, and also the lawsuit ending, the scheduling of the dates for 2024, Coinbase's CEO reacting to JB Morgan's comments about banning crypto, along with Mike Novogratz, and then explaining to you guys what the outlook for 2024 will be looking like with ETFs on the way, and what can you do to prepare to be able to create more income for yourself. So if you like crypto, comment 777 if you're feeling blessed, comment 777 if you're feeling bullish. Let's run it. All right, bull runners, welcome back to the channel. So Solana flipped XRP. It became the 5th largest cryptocurrency by market cap. And as you can see right here, it's sitting at $35 billion. XRP is sitting at $33 billion. XRP has been one of the biggest underperformers in the top 10. And it's been frustrating because it has legal clarity, the most legit project. When you see meme coins like Bonk outperforming everything, even Solana, and then you see a lot of these other projects doing very, very well, and you're holding XRP. You know, XRP is one of the larger positions of my portfolio, so I definitely understand. I feel the pain there. It sucks when you see other stuff holding, but when you have a diversified strategy and you're holding other projects that you're bullish on, that we've been talking about on this channel, you know, for those of you guys that saw ICP, some of those videos, a lot of the gaming projects, a lot of AI projects, then you don't have to worry too hard, because after gaining more than 700%, since its market bottomed out the end of last year, Solana is now valued at nearly $34 billion, and it makes Sol one of the best performing top 100 cryptocurrencies. And so XRP, you know, with Ripple is still dealing with the jury trial and Ripple's long-running SEC lawsuit. So the federal court in July found the firm's programmatic sales to retail investors through crypto exchanges and other platforms as not securities, while direct sales to institutional investors did. And so XRP on the price chart hasn't been doing too much. You know, we saw the outcome of the lawsuit come out. XRP rallied up 94 cents. We've talked about this a million different times. Saw a sell-off with the rest of the market. This was around the same time that Solana rallied from $13 upwards of $31, came back down to this upward trending support of about $17, broke out again, back tested this resistance, and then blasted off from 20 bucks all the way upwards of now like $82, depending on the time that you're watching this video. So XRP, we see this ascending support, we see this resistance. XRP broke out of the resistance, similar to what Solana did, and came back down within this triangle, broke out, could come back down to back test it at roughly 53, 54, 55 cents. But the next move for XRP, I would expect to be major, because, you know, XRP has been building up pressure. It's been building up massive amounts of pressure, and the longer the consolidation and the tighter the range, usually the higher the move. And so for XRP's next move, you know, I'll be discussing that in a little bit, but look at Solana's next move that took place. This was insane. It broke off of this resistance as support and rallied up over 291%. So the next move for XRP, even if we push further to the downside, if we see it sell off to 55 cents, let's just say from where we're at right now, 61 cents, you know, if it were to move to the high of the year, that'd be 220%. You know, I would expect the next move for XRP to be anywhere between 70 cents and $1.30, which would be the downward trending resistance on the macro. If we were to draw from the high of the last bull run of 2021 and match it up with the high of 2018, that would put XRP right at about $1.30. And whereas Solana, you know, I'm looking at Solana, I'm not buying Solana, I'm just holding Solana. And, you know, I'm probably going to be hedging out here soon, because I don't think Solana is going to push too much higher. It could push upwards of, you know, $100, maybe $137, but I would expect a deeper correction for Solana to be happening at some point on the backs of a Bitcoin correction that I talked about in one of my previous videos. And Ripple, you know, which is a pioneer in the enterprise blockchain and crypto solution space, They had a significant milestone just recently happen as the Central Bank of Ireland officially included Ripple's Irish subsidiary in the list of registered virtual asset service providers. So this is big news because this is a strategic move to position them and extend their services across Europe following the enhancement of the markets and crypto asset regulation, which is MiCA, at the close of 2024. So this is lining up with the lawsuit dates that I'm going to talk about in a little bit, when this will be coming to a close for Ripple to pay pay a little fee to the SEC as their right to passage, and it's contingent upon obtaining essential licenses. And right here, since establishing their Dublin office in 2022, Ripple has recognized Ireland's burgeoning reputation as a preferred hub for companies innovating in financial technology. Ireland's supportive stance is evident in initiatives like the Innovation Hub launched by the CBI in 2018, fostering a conducive environment for fintech firms to engage with regulators informally. And so this is some fun facts for you guys, because XRP's approval, will enable institutions located as well too in the DFIC over in Dubai to use the cryptocurrency for global value transfers. This is what Ripple said in a press release. And Ripple's RippleNet product is a currency exchange network for cross-border payments that uses XRP. And so eventually something has to give, and that's when the lawsuit ends. XRP is more than likely to see massive moves at the end of 2024. So it's frustrating to hold and wait. That's why we like to talk about other projects that we think could move first. And that's what's happening right now. That's why we saw ICP break out, whereas XRP is still staying there. And so I'm not selling my XRP, I'm just holding it, but I'm creating more streams of passive income to be able to diversify and back up the truck for the dip, when we see a deeper correction for Bitcoin and the rest of the altcoin market. And so the scheduling so far, and by the way, guys, if you want to see that, an additional stream of passive income for yourself, check out the link in the description below. If you're a business owner, or if you know any business owners at bullrunners.com, you'll absolutely love that. But in a court filed date, November 13th, Judge Torres nailed down the schedule for further pretrial filings. The process of discovery and rebuttals regarding the remedies the SEC will seek in the remaining legal action must be completed by April 29th, 2024. To be clear, the court has already dismissed most of the complaint with prejudice, which prevents the SEC from appealing the decision. And what remains is the charge that selling Ripple tokens to sophisticated institutional investors during the token's original launch is what required registration with the SEC. And so that deadline overlaps the original scheduled trial date, which has originally been set to April 23rd of 2024, right before Bitcoin's halving. And a jury trial is still happening, supported by the pretrial discovery efforts highlighted above. However, the opening of that process has been adjourned, which in sine die, which in Latin means without a date, and leaves the actual trial date unsettled for now. So what does that mean? Well, mark this date. No, not that one on your calendar, according to fool.com. So don't be a fool here, because the Ripple case is still unsettled in some ways. Judge Torres has not rescheduled the institutional trading trial to a firm date, and it could take a while to finalize the arrangements for a complicated trial of public interest. So it's best to wait for the final scheduling order, but the jury selection might start next summer. And it's anybody's guess how long the actual trial is going to take. The trial has already been delayed once, and it could be delayed again, because the wheels of the legal machine grind in unpredictable and slow ways, like an old school locomotive going on or some people walking across the Oregon Trail. Still, the current situation points to a full trial finally taking place in the second half of 2024. People are more excited about other altcoins like Solana, like Bonk, meme coins, gaming projects, Avalanche, etc. And so that's why if you have a position in XRP and you've invested more than you can afford to lose, or you did lump sum buys, meaning that if you had $100,000 to put into crypto and you put like $100,000 right away into XRP, and you're not dollar cost averaging, then you got to reevaluate your strategy here, because if you have 100K, obviously not financial advice. I'm not going to tell you how much to put in, when to buy, when to sell. I'll just tell you what I believe is going to happen next. But XRP, I believe, will have a breakout at some point. So I don't care. I don't care at all when that happens, because I'm just going to go to sleep, take a little naparoo, and wake up at the end of 2024. Hopefully I'll still be alive. If I'm dead, I'm dead. It doesn't matter anyways. But I'm going to be alive for a lot longer than a year. So what's there to freak out about or feel FOMO? about selling right here at a low, when it has yet to break out, and buying Solana right here at a high when Solana could push a little bit further and then see a deeper correction with Bitcoin. It doesn't make any sense. This is how losers lose and winners win, and the rich get richer and the poor get poorer, is they sell out of a project like XRP right here when it's a frustrating performance, and they think it's a crap project just because of price action, when they're not even subscribing to the channel and watching the news on what's taking place with these partnerships and these central banks and Ripple working with these central banking digital currencies and these massive companies over in other countries. They don't even pay attention to that. They just look at the price chart and they're like, price chart, nope. And then they look at Solana and they're like, yeah, I'm going to buy Solana up here. And then they get freaking dumped on by the VCs that bought Solana down here that are pumping the market and selling off from like Ethereum or XRP and putting it into Solana, or price suppressing things like ICP to pump Solana. That's what happened during the last bull run when ICP crashed from $2,000 all the way down to like a few bucks. So they buy up here, they get dumped on, and then the people that are dumping right here, the VCs, they then pump that into XRP, and then they move XRP up. So it's an ebb and flow of liquidity. You just got to know where the liquidity is going to move next. And a lot of liquidity in Solana, not necessarily it's going to move into XRP. It's more than likely going to move into Avalanche gaming projects, Solana-based projects, and then Optimism and some other Atom and some other projects on different chains. And so when we go back here for you guys, there's massive opposition in the crypto space right now that is being attested from JP Morgan and like Senator Elizabeth Warren, that have notoriously been, freaking goof troops. And so let's listen to what Brian Armstrong has to say as he reacts to Jamie Dimon, the CEO of JP Morgan Chase's suggested crypto ban.
Well, we really believe that crypto is the future of money, and that's already here. So it's not just a speculative asset class. People are now using it for all kinds of different types of utility. And we always believed that the industry would evolve in this kind of three pillars. We felt like it would start as an asset class. People would trade speculatively. Then it would become a new type of financial services with people doing stablecoin payments and commerce, remittance payments, earning yield on their assets, getting borrowing and lending with DeFi. And now, we're even starting to see this third pillar come online, which is crypto as a new type of application platform. This is what people are calling Web3. It's a new way for people to build applications in a totally decentralized way, with decentralized identity, decentralized social networks, decentralized scientific research. And it's kind of the future of the internet. So it's much bigger than people, I think, realize, who are still thinking about it just as one asset class. And that's something that's exciting.
Since we last talked, I think it was the Goldman Sachs Tech Conference a couple of months ago, but just the prices of Bitcoin and other cryptocurrencies have gone through the roof. What do you think is driving that? Is it fundamental, or is this a good old-fashioned speculative move in crypto?
Well, you can always look back at these things with 2020 hindsight and try to make sense of it. But I think in this case, a few things. One is we've had a number of ETFs being filed by the biggest, asset managers and financial service firms in the world. And by the way, Coinbase has been named as, of course, the custodian in almost all of those, which is great. But I think the market is hoping and anticipating, as we are, that in Q1 we'll see some of those approvals come through. But more importantly, I think what people are reacting to this year is crypto is here to stay. I mean, think about all the bad headlines, the enforcement actions. There were CEOs going to jail, and yet crypto prices are up 90% year to date. And so I think the industry is kind of sending a very clear message here that this technology is here to stay. 38% of young people, if you survey them, they say they think crypto is the best way they have to have some new sort of economic opportunity in life. 90% of Americans are frustrated and upset with the current financial system as it exists. And so, yes, there's going to be ups and downs, but this movement's here to stay. And we need to send that message to Washington too, by the way, because I think not everyone there is aware of that.
The Bitcoin, that ETF, when do you see that being approved? And then once and if something along those lines gets approved, what happens? What happens to the Bitcoin prices? What happens to this industry?
Yeah, well, of course, I don't have any kind of inside information about when exactly it would be approved, but I think myself and others in the industry, we're all kind of hoping that might happen early next year. But what happens is big new pools of capital can now flow into these ETFs. There's certain pools of capital where their restrictions or bylaws don't allow them to, say, sign up to a Coinbase account and own digital assets directly, but they can own an ETF. And so these are where the largest pools of capital in the world, pensions, endowments, hedge funds, things like that, where they may be able to now move into the crypto space. Now, just owning a Bitcoin ETF is great. You're going to be able to get exposure to Bitcoin, but I also think it's going to bring a lot of people into the crypto space who may want to trade and own other assets. They may want to use crypto. They might want to earn yield on their assets or do institutional financing. And so I see it as a benefit not only for Bitcoin, bringing more pools of capital, but also for Coinbase's existing business, Coinbase Prime for our institutions, Coinbase Retail for our retail customers. It's also just going to drive activity and awareness there. So I think it's all around good. And Coinbase has a place to play in the value chain here directly with customers, but also as a custodian for the ETFs.
You've been very vocal, Brian, on the need for regulation, whatever form that may be. I mean, do you think new laws would have prevented some of the blowups we saw in 2022?
Yes, I do. I mean, look, some of the rules are already clear that are out there. You have to follow AML, KYC rules, OFAC sanctions, and I think that part of the ecosystem is already pretty clear. But there's a whole bunch of questions which are not answered currently under the law about, just a great example is, are some of these assets a security or a commodity, right? Gary Gensler, when he was asked by Congress this question for Ethereum, which is one of the major assets, he couldn't answer that question. And so these are big unanswered questions in the space. Now, what has this done? I mean, it's basically driven a lot of the activity offshore to unregulated platforms. Those have had major issues this year, as everyone has seen, and that's caused a lot of consumer harm, including for American investors. And so when there's not a clear rule book, the industry is not going to be built in America. That's bad for the American economy, but it's also bad for American retail investors who are getting hurt by going offshore to these unregulated products. So ideally, the first case option would have been the regulators work with industry under the Administrative Procedures Act. They do a rulemaking process, publish clear rules. Everyone has to follow the same rules. That would allow the industry to kind of flourish in the US. Since that didn't happen, instead, we've had to kind of rely on the courts to create case law, to create some precedent. And we're ultimately, I think, going to have to rely on Congress to pass new legislation that would clarify, where does the CFTC and the SEC, what are their roles in this? So it's not having this turf war, lack of clarity, pushing the industry offshore. And the last thing I'll just say is I think the US is actually kind of behind on this. I mean, 83% of the G20 countries out there have already started work on crypto regulations and new laws. So the US is behind. There are 2 bills going through the House right now that have gotten bipartisan support in the House committees. We're hoping those go to a full floor House vote early next year.
You're really plugged into the DC and the regulatory scene, Brian, as you should. I mean, it makes sense. You have to be up to date on this stuff. Do you get that sense that regulators are taking what Jamie Dimon said seriously on a potential ban of crypto?
No, I don't think that's serious. And it's actually strange because although Jamie Dimon's comments were a bit perplexing, internally at JP Morgan, they're actually advancing several projects working on blockchain and crypto technology. So there's such a large organization. I think sometimes the left hand doesn't know what the right hand is doing. But no, there's no world in the United States where 52 million Americans have used crypto now. This is 38% of young people believe this is an important tool for their economic growth in the future. I mean, it would be political suicide to be anti-crypto and try to ban it to that extent, right? And so I think next year we need to send a very clear message on that. There's an organization, standwithcrypto.org, which has been bringing together the crypto customer base in the US and trying to get to 1 million of them that will raise their hand next year before the elections and kind of say, all right, I really want to be a crypto advocate. I want to vote for pro-crypto candidates. I want to donate. I want to call my congressmen and representatives. So between the $78 million super PAC that came out yesterday, which is a huge step for the crypto industry, and this standwithcrypto.org grassroots movement, I think we've got a really big chance to send a message in DC.
So that's a really good point, because the presidential election that's coming up, think about it, guys, like all these candidates that are trying to become president, why would they bash crypto? Why would they try and advocate for it going away when a large chunk of Americans have either bought crypto in the past, they currently are buying crypto right now, or they know about it and they want a way to be able to make money. So as a candidate, you want to support crypto, and by supporting crypto, you're basically taking a stand against idiots like Jamie Dimon.
Let's go straight to the Jamie Dimon of it all. You watched that, you heard him say that, and you thought what to yourself?
He keeps doubling down and he keeps being wrong. What surprises me is so many of Jamie's clients, right? Some of the wealthiest guys in America, Abby Johnson at Fidelity, Jeff Yass, Stan Druckenmiller, Ray Dalio, big investors all believe that Bitcoin is a store of value. We see it in our client base. Our trading desk has been busy with hedge funds buying. We see it in institutions buying. And so I don't know where Jamie gets off thinking that he's smarter than all those guys. It's the epitome of
he's
arrogance.
also spoken out against carried interest, and most of his clients happen to be beneficiaries of that and
again,
enjoy that and think it's a great idea as well. So,
carried interest is kind of tax policy, and I actually kind of agree with Jamie on carried interest. So it's very different on saying what has value, right? I think it's supreme arrogance to think he knows what has value, but all the rest of the people don't. And quite frankly, he's just been proven wrong. Bitcoin has way outperformed JP Morgan stock over 1 year, 5 years, 10 years, you name the period. People around the world believe in this. They believe in the community, the ecosystem. They see governments spending too much money, not just here in the US, but everywhere, and think you're going to debase fiat currency. And so, I mean, the story has kind of already been argued and won. When Larry Fick went on your show and said, I think you're going to see Bitcoin in all portfolios, I think, it was kind of game over.
well, the game hasn't in some ways begun yet because Larry Fink is not able to even offer Bitcoin yet to his clients for the most part. So let's talk about that piece of it. Where do you think the SEC is? How much do you think actually what Jamie Dimon's saying was an effort to stymie or to slow down or to make the SEC rethink wherever it may be if you think that the winds are shifting in your favor, for example?
I was trying to get in his head yesterday about why he's doing this, right? I mean, pandering to Elizabeth Warren maybe so she doesn't come down hard on banks. There doesn't seem to be a whole lot of sense. Listen, the SEC is going to approve a Bitcoin ETF, and they're going to do it soon. All our indications is that's going to happen. There are 7 or 8 really credible players.
People have been saying that with great certainty now for the last 12 months. And by the way, we're saying that with great certainty 2, 3, 4 years ago.
No, I think things shifted, and they shifted, and we can tell just by our own application with the type questions that come back where you are in that process.
But Mike,
they shifted because they lost a court case.
Let me ask you this, Mike. There are going to be people who are watching us who are going to say Mike Novogratz is talking his book. He's got so much money invested in this stuff; it's got to work for him. And then there's other people who might say Jamie Dimon's talking his book. I will say I'm deferring. No, I'm not deferring that I'm necessarily agreeing with Jamie Dimon per se, but I don't think that he's talking his book in that I believe that this is a view he has held. He may believe it's incorrect, but I think it's a genuine view that he has.
Listen, he's been consistently wrong. I like Jamie. I actually want him to run for president. I think he's a very smart guy, but he's been consistently wrong on Bitcoin. He just has. And what he's been wrong about is the appeal continues to show up everywhere. Right? This is one of the only global assets, not just in the US, but in Japan and Korea. Everywhere you see people, you see Bitcoin. And that story, it's a system of narrative, actually, right? It's the social construct between two people who say, I believe this has value, therefore it does. Very similar to gold. And that continues to percolate all over the globe. It's not that complicated, quite frankly.
Well,
right?
But, I want to make I don't know if there's an observation that's going to be interesting to you or not. So Anthony Pompliano, who I know you know well, was on the set earlier this week. And we were talking just about how much of Bitcoin today is owned both internationally, but also who the buyers are today. And one of the things that I thought was so interesting, and I don't want to misspeak about what he said, but that it was a lot of the same buyers, meaning, first of all, 70% of Bitcoin has been held for years now by the same people, and that it's the same people who keep doubling down on it. And I don't know whether you think that's actually a good
I don't think that's
great
true.
Loyalty to this thing, but
listen,
I don't know if that's actually a good sign.
I like Anthony, but he doesn't have a big broker-dealer that's dealing with lots of clients. We're seeing a diverse client base buy this. If you just look at the public stocks, look at Marathon or MicroStrategy. I mean, Michael Saylor sold $750 million or $650 million of stock last month, and he's selling another $750 to buy Bitcoin, and his stock doesn't go down. there is an unbelievable pent-up demand with U.S. retail equity investors to get exposure to crypto. Marathon, Riot, all those stocks trade amazingly well with large volume. And so I really think there is a much broader base of people that want to own digital assets, that want to own Bitcoin, than just the few, crazy Bitcoiners that maybe Anthony was talking about.
Bitcoin is up, as we mentioned this morning. It's up about 14% this month alone, way up for the year. I don't know how much. The next guess probably knows 80% or something. Let's get right into it with crypto and the broader markets following what the Fed said last week. Joining us is Galaxy Digital CEO Mike Novogratz. And I don't know how you'd weight all the different things, Mike, but for a while it looked like the Bitcoin price came off 25,000, started headed up based on some of the spot ETF conjecture. But this latest move, which really accelerated, had a lot more to do with what you think as an alternative to fiat, as an alternative to money printing, when the Fed said, yeah, we may go back into an easing phase again, and then it was off to the races.
Yeah, Bitcoin up 150% on the year.
150.
Best performing asset again. For all the Bitcoin skeptics out there, a little victory lap. Listen, the Fed's pivot is really important. That press conference was as dovish as anybody expected, and the markets are behaving that way. You look at fixed income markets, equity markets, they all are now trading a Fed pivot. And is it March, January, or do they wait till the April meeting? We'll see. We'll see what their narrative is. We'll see what the inflation data is. But this is all based on inflation coming down, and it's not based on growth collapsing. And so they shifted to a more inflation focused Fed, which gives them the room to cut rates. I think crypto likes it. We're going to get this ETF before January 10th. That's kind of the drop dead date that Gensler has before he gets in trouble with Grayscale and the lawsuit. And so I think you're going to see this, announced. It won't start trading then, right? That probably takes 6 to 8 weeks after that. But it's just more fuel for a fire.
So what are your guys' thoughts on all that? Because with Bitcoin ETFs on the way, here is what this means according to Rajaz Soni. And he's saying an exchange-traded fund is a fund that holds assets and individual shares of the fund can be traded through an exchange. Bitcoin ETF will do one thing and one thing only. They hold Bitcoin and allow you to get exposure to Bitcoin in your investment accounts. ETFs will make it much easier to get exposure to Bitcoin. And so ETFs mean that large institutions that previously were not able to own Bitcoin due to the technological difficulties in doing so will now be able to own it with a custodian holding their coins. And not everyone wants to buy Bitcoin and keep it in self-custody because they just don't want the risk associated with losing their private keys or getting hacked or anything like that. And pension funds and insurance companies don't want to worry about storing their Bitcoin securely. Their goal is to ensure that investments perform well and meet client needs. And they're willing to pay the 0.5 or 1% fee to ensure that their assets are secure with the largest financial institutions in the world. And ETFs allow easy exposure to Bitcoin in retirement accounts. And currently, you can only get exposure to Bitcoin in retirement accounts through futures ETFs, not spot ETFs yet. And Bitcoin futures ETFs do not match the performance of Bitcoin. An ETF like BITO is designed to lose value over time. Futures just gives you exposure to the increase in the fiat currency value of an asset. They don't give you exposure to the benefit of owning the asset forever. And so that's a big deal because Bitcoin ETFs will give you direct exposure to the price of Bitcoin on a spot ETF. And if Bitcoin's market price increases 100%, so will the ETF price. And BITO has only risen 100%, while the spot Bitcoin price has increased over 160% over the last year. So Bitcoin will see billions of dollars of inflows, and the ETF will be designed to buy Bitcoin at market prices as money flows into the fund. For example, if you buy $100 worth of ETF shares, BlackRock will buy $100 worth of Bitcoin through Coinbase and move it into cold storage. This will increase demand for Bitcoin, an asset with a finite supply that nobody can change. And the ETF will remove unit bias. And today, a lot of investors are staying away from Bitcoin because they think it's too expensive, and ETFs remove this unit bias. For example, if someone can buy one share for $10, they get exposure to a small amount of Bitcoin. And many people still don't know you can buy fractional shares of Bitcoin. They think they can only buy one. So that's why people look at altcoins like XRP or Solana and they're like, oh, I can afford or Ethereum. I can afford one Ethereum. And people sometimes just want one of something rather than a fraction of it because they want to feel like they're a big baller, hold one thing, one whole Ethereum versus 0.01 Bitcoin, or whatever the equivalent is compared to Ethereum's price. So financial institutions will promote Bitcoin everywhere. As more people get exposure to Bitcoin, it becomes more trusted in the finance community, and more exposure equals the price of Bitcoin going up. It's very simple, supply and demand. Higher prices mean that ETF issuers can collect more fees because they charge a percentage to hold it and manage it. This is a cycle that feeds on itself. As financial institutions get more clients buying Bitcoin, they collect more fees, and then these fees will be used to promote and educate clients about the ETFs through paid advertisements. That's why we see ads like this popping up.
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
So we will see money flowing out of other assets and into Bitcoin. As money flows out of assets like stocks and real estate, the value of those assets will decrease due to lower demand compared to Bitcoin. And at the same time, the price of Bitcoin will rise due to higher demand and limited supply after Bitcoin's halving. And Bitcoin's ETF will likely outperform all other assets due to limited supply and unlimited demand compared to the US dollar, where they can print as many as they want. There's only 21 million Bitcoin ever available to be mined, and 19 million of that plus has already been mined. So most investors don't care about cash flow. They care about making money. They care about their investments going up, and housing prices drop to their utility value within a few decades or sooner because owning rental properties is a lot more of a headache than just owning an ETF because it takes a long time to liquidate a home. You got to go through like a month of closing process paperwork, and then you got to move all your crap out of your home. Like, how are you going to fit your freaking bed frame, Bob, down the freaking staircase? Who are you going to call to carry it down? Are you going to trust the 19-year-old kids working for not UPS, working for a U-Haul to come and help you pick up some moving furniture and dent in your walls? Or are you going to do it yourself? So it takes forever to do that, whereas they can just push a button, they can liquidate the Bitcoin, you got money in your account. So real estate is stressful. Yes, you can make a lot of money, it's real, but it's really not real estate, it's debt estate. Real estate's inflated due to inflation and pumping up housing prices. And plus, a lot of these, like BlackRock, they're buying up through Zillow a lot of these properties and they're scooping it up, and that's creating more demand to drive up prices even more. So you will own nothing and you will be happy. That's the plan leading to 2030. And so crypto is that plan to be able to get wealthy so you could be able to own more real estate and be part of the 1%. And housing prices drop to their utility value because owning rental properties, right, it's a headache. Bitcoin ETF investors will see their portfolios rise in value a lot faster than anyone invested in other assets like stocks and real estate. Do you guys believe that's true based on what Raza is saying? The ETFs will decrease the number of transactions on the Bitcoin blockchain and will reduce transaction fees. Today, if you buy Bitcoin on Coinbase and move it to your own wallet, you are adding a transaction to the blockchain, increasing demand for transactions. The ETFs will not require a movement of Bitcoin from an exchange to a personal wallet, meaning fewer transactions on chain. So Bitcoin ETFs are coming. They're going to change the financial industry for good. So are you ready for this? Now, for those of you guys that aren't ready for this and you want to learn how to be able to accumulate more Bitcoin, more XRP, more Ethereum, maybe you want some Solana, you want to get Avalanche, you want to get some Dogecoin, maybe you want to get some Chainlink, any of these top projects that, have smaller market caps, because Bitcoin's market cap is 853 billion. Bitcoin will go back over $1 trillion market cap, whether that happens during the ETF phase or at the end of 2024, based on what I talked about in the other video, with the correction of a 618 coming potentially. Well, a lot of people are going to be looking down this list and they're going to be looking at a lot of other altcoins. So if you guys want to see our top altcoin picks that we're personally bullish on, you can check out bullrunners.com. The link's in the description below to our Telegram group. You can plug in there, subscribe to our video newsletter. And also, if you're a business owner and you want to discover how you're losing $700 to $800 per employee that you have on payroll, and you also want to learn how you can help your employees save an extra 4 to 6% or see an extra 4 to 6% on their paychecks at no cost to you, then take action now. Go to the link in the description below. This will give you a competitive advantage as a preferred employer, offering enhanced pay and medical benefits immediately when you book a call and you check out the video on the other side. You can apply now. Guys, it's no cost. The coolest thing about this is you can help business owners and earn a residual income, or if you are a business owner, you can save money and get some benefits out of this so you can have more income to accumulate more crypto. That's the game plan here. As we back up our truck all the way to the bank, we grab the bags, pack them and stack them, leave no bags left behind, because we believe the spending power of the dollar is going down in value. That's a fact based on inflation, blockchain tech, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I'll see you on the next video. I'll see you on bullrunners.com. As always, stay bullish.